So I just picked up 5 shares of Google after hearing about their 20-to-1 stock split. I want to tell you why I did this. Reference back to some of the bigger companies that have split recently, why I passed on those particular stock splits and didn't participate, why I'm looking at this one now, and why I think that's really, for me, at this point in time, a win-win trade. In this video, guys, I am going to show you charts from Webull. Guys, if you do not have Webull, this month they are giving away 3 free stocks valued up to $3,300 when you fund a new account. Not to mention $5 in free crypto when you activate Webull Crypto and you complete 1 crypto transaction with only $1. So Google just came out and told us they crushed earnings, and with what's been going on with tech over the last month, it was kind of shocking to see. Everyone's been diving by 25, 50%. They actually gapped up after announcing their earnings, and not to mention, they mentioned that they will be doing a 20-to-1 stock split. And frankly, it was the stock split, not the earnings, the good earnings or the gap up, that made me want to purchase it. And you might be thinking to yourself like, all right, Brad, why is that a big deal? Because companies do this, and really, one of the main reasons they say they do this is because the share price is getting too expensive and they want to make it more appealing or more affordable for the everyday investor. But now with fractional shares, that doesn't even matter too much, right? Pretty much, if you have a brokerage that's not using fractional shares, it might be time to start looking for another one because everybody's doing fractional shares. So it doesn't really matter what the share price is. And the stock split does nothing fundamentally to the business. It really does nothing. It does nothing to your position. It doesn't make it more valuable, less value. It frankly just gives you more shares. But even though it does nothing fundamentally to the company, there's still this psychological piece that comes along with it when it comes to the market. And we saw this previously with major companies that have done stock splits recently. So the first company we'll look at here that had a major stock split, I guess recently, would be Apple. Back in August 2020, all right, they announced that they were going to be doing a stock split, and you can see from this position here where it was $110 leading up into the stock split, it went up a ton in price. We can look and see exactly what this was. If you were to look at the bottom here and you were to get all the way up to the top, that's a 26%. 26% leading up to it for nothing really changing the company. Like, all right, well, Brad, it's Apple. It should still go up. If we look, Apple, yeah, it goes up, but this was a definite spike to the upside. And after that split, it pulled back a little, but it continued on its bullish ways. So if you were able to trade this in the short term, you were able to take advantage of this time leading up into the split. The same thing happened with Tesla. Now, granted, Tesla is a yo-yo. It does whatever it wants to do anyway. It's up, it's down, there's no rhyme or reason. But we can see the same thing. They announced a split the same exact time pretty much as Apple. And during that time, it shot up from here all the way up to here, almost 81%. I've seen some articles say 82%. That is a huge, huge increase on really what people were saying was just the announcement of a stock split. And yeah, it might have been like the time they both announced the same time. They might have played off one another. But NVIDIA, guys, they did the same thing back in 2021. And we could see pretty much a big climb for them as well. Almost a 30% increase up to the time when they had their stock split over here. It went up, came back down. But still, somewhere in the neighborhood of 27 all the way up to 40%, you could have got yourself if you had invested leading up to this particular split. And like I said, this is all hype. And I don't consider myself a hype guy. I didn't do this because I think the price is going to go up. I think Google's going to go up over time anyway. I've never invested in them before. So there is one reason, okay? There's a reason why I don't care about stock splits. I don't really care that the hype is going to drive it up. I'm more of a long-term investor in my overall portfolio, regardless of the short-term stuff I do in the size of hobby. So why? Why Google? The reason why this one's important to me is because of the size of the split. And with owning 5 shares and it being a 20-to-1 stock split, in July, when this happens, I am now going to own 100 shares, and that will allow me to start trading the wheel with it. Yes, the whole motive behind this is so that I can trade the wheel with Google. And if I wanted to do this now, $2,700 a share price times 100, yikes. Don't have that kind of capital to be investing in one wheel. And you might be thinking to yourself, okay, once again, like, Okay, Brad, why not wait until July when it splits and this thing goes down by a 20th to about $150 and then just buy the shares then for 15 grand? Why spend the 15 grand now? Well, really, it is to hedge against that hype. It really is. I think there's a pretty good chance that's going to hype up. I don't care about that hype, but I don't want to get myself in a situation in July when I'm like, man, I could trade the wheel right now with these guys, but it's artificially inflated 20%, 30%. I wish I would have bought it when it was announced and it still was dipping. If we look even over the last couple days, I think I bought it right here 2 days ago. It's even come down in price since then. So it shows me I'm getting a pretty good fair price. We could see this kind of supply zone that this is kind of consolidating in. And I have July 15th here where we have to get to. So as long as I stay roughly about this price till here, if it trades flat, that's still going to be okay with me. And like I said, I definitely, there's one thing I say about trading and the wheel, it's know your exits, right? Have an exit strategy, have an entry and an exit. And my entry was, when they announced this, I knew it was going to spike. I said if it pulls back a little bit, and that's exactly what it did. Here's where we were before the announcement. It gapped up. Pretty much once it filled that gap back down, that's when I knew that I was going to enter. That was my entry price. I wasn't going to dollar cost average in. I just wanted to buy the 5 shares and pretty much get it over with. And now it's just going to sit there in my Robinhood portfolio and it's not going to do anything. Why is it not in my Webull portfolio? Because I have instant deposit over there and I wanted to just put 15 grand in and make it happen. And I do not have that instant deposit here on Webull yet as I'm building my account. So what are my exits, right? You need to know your exits when you enter any sort of trade. Here's my worst case scenario, or here's my best case scenario. Here's really all my scenarios that I can think of. If you could think of more, get down in the comments below and let me know. But this is really why I think this is win-win for me. Number one, best case scenario. This thing does go up 20, 30%, maybe 5%, whatever, between now and July. The price going up is amazing for me because now I'm going to have a split. I'm going to have 100 shares. And because the price of the stock has gone up, I now have an incredible stock that's at probably an elevated price, probably overvalued, but that's okay because I'm going to be trading with it. And now I can write calls well above my cost basis, which is going to bring me really close to the money, increasing my premiums. That's like, I think that's the best case scenario when I do an update video in July, when I write my first covered call. That's what I hope that I'm saying, and maybe not. You know, I know the internet police will come back to this video. I'll tag in the update and maybe I'll put my foot in my mouth. Maybe this thing's going to go down 40% more. And I would have been better buying it in July. We shall see. I'll see you in July. But that's really the best case scenario for it. I want it to go up. And then we get the split. I get 100 shares. Boom, I'm right into at the money calls well above my basis. Scenario 2, probably worst case, is this thing, it tanks. It goes way, way down. I mean, I don't know how low it can go, but it can go pretty damn low. Right now, we're on a pretty good dip. I mean, how much is it going to go down? I don't know. Could it go to 0? Yeah. Could it go to 1,000? It could go anywhere it really wants to go. But is there, like, I can't think of any other companies that would be like a better bag hold than Google. Right? It's Google. If I had to make a guess, or I had to list 5 companies I thought were definitely going to be around in 5 years, I think Google would be kind of high on my list, to be honest. And you know, I don't really invest in them because I am a VTI investor, so I have them through all my index funds. They're heavily weighted in the market, but you know, if I bag held Wells Fargo for 2 years and broke even on that. So if this thing tanks and we get the split and I got to sit on it before I can write calls, okay. And to be honest, if it does tank 40% and in July it gets to $130 a share, I'll probably start writing cash secure puts to hedge against how much I lost. So maybe that wouldn't even be that crappy, but I think that would be the worst case scenario. It just tumbles in price way below my basis. Big fucking deal. And what's the third scenario? I guess the thing could trade flat, right? We can go up, we can go down, or we could trade flat. I'm in the exact same position I am now. I didn't need to buy it now. I could have bought it later. I'll jump in, and right now I'm looking if we take the premiums for what covered calls are at the money right now, or even a pretty high delta of 0.2. I think it like average out to like $50, $60. So in July, if I'm making $50, $60, even with a really small delta of 0.2, that has to go above my basis. That's not going to suck either. I'm actually really pumped to own 100 shares of Google. But you guys will figure out a way that this sucks. Get down in the comments below. Tell me why this move sucks, or tell me if you like it. Are you trying to get there? Get there with me. In July, we can start writing calls together. I will definitely do an update when I do my first covered call. We'll look back at these charts and we'll see how much of an idiot I was. Did it go up? Did it go down? Or stay flat? Because those are my 3 predictions, guys. Until I see you on the next one, stay positive, work really hard. Always, please, be kind to one another. Hope you have yourself an amazing day and even better tomorrow.